Stock started off the week the same way that it finished last week and started last week and went and through the middle of last week, and we just continued a very strong winning streak. I'm going to show you how strong that winning streak is and how that and what that could mean and what the technical indicators look like there. We're going to talk about how which sectors and what types of stocks are driving this this little rally, this little winning streak. Now that the quote-unquote correction is over, the GameStop noise is over. I'm also going to show you kind of the signs of noise and what that can mean, and what an exhale could look like, and how do we trade. We talk about can we trade a bullish trend and still expect an exhale and still trade both at the same time. With both those expectations. So we're going to talk about that. In fact, we talk about that a lot in our Market Outlook live videos that I post whenever I do these videos, because we're managing a lot of these trades. A lot of them are still very directionally bullish and doing very well today, mind you, as well as some other trades like we do today for today's trade idea that can go in either direction, and we benefit from that too. So let's go ahead and get started. Today is Monday, February the 8th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's take a look at the S&P 500 with the market forecast indicator. You can see 6 days in a row to the upside. One of them a filled-in body, but still finished higher, even if we close lower than the open. But 6 days in a row, boom, 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 all the way up, continuing to move higher here as I activate these and move these up to the upside. Move that one up to the upside as well. Intermediate posture, strongly bullish. Market sentiment line, strongly bullish. Near-term line, strongly bullish. In fact, the near-term line has been above 50 5 of those 6 days. 7 to 12 is your typical time frame. Obviously, after getting a lower near-term low, we're back up to a higher near-term high point. No divergence because we got higher than this one. Momentum line still kind of stuck around 50 because we're getting some gaps in here, but you know, nothing too concerning. So obviously it's continuing this bullish, dark green shading green line, bullish trend. The Russell 2000 is even more bullish, right? If you look at, as I've told you before, the Russell 2000, in fact, I tweeted this out. The Russell 2000 continues to be, it's not at a record above its 30-day moving average, this green line. It is pretty strong. It's up at 8% now, almost 9%. So if I were to activate this, if I were to edit this and go up to 8.85, you can see that's traditionally a relatively high level above the 30-day moving average. It's not the highest of the year. It's not even the highest, it's not even really the highest of the last 3 months, as we've been higher than that. But when you look at it, if I were to go all the way back in time, all the way back to the max available, and then we look at how high we are above the 50-day moving average, then you can see we are 13%. That's 87th percentile. Obviously, we were higher during that parabolic move in June. Still pretty darn high, though. And then you look at how high we are above the 200-day moving average. And you can see this is the highest ever. 40%. We have eclipsed 40% above the 200-day moving average. We have never been 40% above. 38.87 was a previous peak. We have never been more than 40% above the 200-day moving average. That is how high it is there. And if you look at at the weekly chart, now remember, the weekly chart's not over with, right? We still got time to go. But if you look at how far above, let me switch this now to a 30 week. So this is that green line you see there on the chart. This is the 30-week moving average, and it's simple. We are now nearly 30% above that line, which is also the highest. And as of right now, this week, we're getting a cluster. Now, it's only 1 day into a week, so take that with a huge grain of salt. That momentum line can drop really quickly depending upon where we finish relative to the high of this week. So as of right now, though, that's a pretty strong overbought cluster and it's our second one in the past 5 weeks, but again, nearly 30% up above that green line. So very, very strong move on the Russell 2000. If you look on the NASDAQ, again, it's 5 days out of 6. We did have one down day there in the middle, but still back above to new near-term highs. Relatively strong move showing up on the NASDAQ 100 as well. All right, now before we look at how these indexes are showing on some other indicators, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit the thumbs up icon. That tells us that you liked our video today, obviously. And number two, more importantly, it tells us that you want us to do another video again tomorrow. If that's the case, let us know with one click. You can do that right now. If that's not the case, if you don't really care about us doing videos anymore, then you don't have to click on anything. You don't even have to watch our videos if you don't like them. And while you're down there too, comment. What did you get out of our videos today? What stood out to you? What questions do you have, or what comments do you have on anything I discussed? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. You get access to our Market Outlook community, our message board, our forum on our website with your free subscription. So check that out. Also, follow me on Twitter for more content in between the videos from day to day. While the market's going during the market day, there's my handle there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, come over here on the right, click on this play button. That takes you to our Market Outlook Live. I review all the trades that we put on in these Market Outlook videos. I review all of my trades. Every day I do the Market Outlook, I do a live video, 3:30 Eastern Time. This is where you get access to it. Just click it there, or you can come up here and click on the live trade review button as well. Come down here. Here's all of our trading rooms that we have coming up, including our DGI class. Tomorrow, probably our most popular class that we have, as well as my directional option strategies class tomorrow as well. You can get all the trading rooms over here just by clicking on trading rooms. Again, that's all of our plus and our premium subscribers get access to the trading rooms and the Market Outlook Lives. The premium subscribers also get access to our class forums, as well as all of our premium tools and Brandon's been updating some of them. You can see not only the charts here, but also the sector watch list that we do. Come over here, click on this heart. It opens up a new tab. Hit this like button right there. Also click on this thumbs up icon. Opens up another new tab. Come down here and click on the like button as well. Again, the more you do that, the more people will see our content based on those algorithms, those social networks algorithms. It also benefits you. The more you engage with us, the more they will promote our content in your timelines. So it benefits us, and it benefits you too. The more that you like and share our content on your timelines there. All right, now let's take a look at some of these other indicators. Let's look at the RSI. You can see the SPX is back above 60. We're not quite getting up to new highs yet, even though we already are up to new highs on the index. The CCI, same thing. But look at these indicators on the Russell 2000. We are back above 200. This one got to 234. We're at 233. Here we're getting up to 74. We had gotten up to 75, and then this one we got up to 77. So these are some really high numbers in and of themselves. Like I said, we're really kind of going parabolic again on the Russell. This was only a 5-day run. No, this was a 6-day run too. This is the last time that I noticed, and I could be wrong in this, but this is the last time I noticed that we had a 6-day run. You can see 1, 2, 3, 4, 5, 6, and we kind of went parabolic and ended there. We actually had a 6-day run out of 5 out of 6 here as well. No, excuse me, 6 out of 7 days there, and then a couple down days, and then a 6-day rally. So not quite the same, though this 6-day rally is much bigger than the one. And as I told you before, that 4-day rally was to a new all-time high was the biggest 4-day rally to a new all-time high since March of 2000. So obviously we are showing some extremely strong indicators here. You look at the DMI for SPX. Oops. It'll let me. Look at the DMI and you can see we're almost back above 30 on the positive index. So that would still be a lower high even though we're already to a higher high. The negative index is really being stubborn. It's not dropping below 25, and it would be a much higher low point. The ADX is still well below 20. So it's interesting that we have a trend. The trend strength indicator suggests that it is a strong trend, it's a re-engaging a new strong trend. We're back above 1, we're back above 50, so we're back to a weak bullish trend. But we had this strong bullish trend for so long that we had ended on that particular indicator. But then you come over to the ADX and you can see that ADX is well below 22. Like it's not really getting going because it's been such a slow grind compared to this move where the ADX eventually popped up above 40 because it was such a strong move to the upside. Even over here, you can see the ADX made a run up above 20, and we just cannot get a good run going on the ADX up above 20 because both these directional indexes are so close to each other. The positive is doing great, but the negative is not dropping far enough and fast enough to get a good move. You can see the if I look at the this is one I want to look at, the linear regression. Let's take a look at the linear regression here. So going out to a 20-year linear regression, you can see SPY has bounced back up above the second standard deviation linear regression channel. So just like that, like we are right back up above there. And if you look at IWM with the same thing, you can also see too that it is outside the third standard deviation channel, or the 100% mark, well above the median. So both these lines just getting some extreme levels to the upside. I mean, just right before the election, the Russell 2000 was sitting right at its mean, and now in just however many weeks that is, it's gone from right around the mean to outside the easily far outside the second standard deviation channel to get to an extreme point. So big moves right now, big, strong, very strong bullish sentiments on a lot of these indicators. Here's what the 3 green arrows look like. We're well above the 8-day moving average and the 17. Again, you look at IWM, which has made an even bigger move, and you say, okay, well, how far up above right now, because it's such a short time frame, how far up above that 8-day exponential moving average are we? So if I were to go 8 here and then 1 here for the price, so how far up above that green line are we here? That's what this is measuring. We are in the 95th percentile. The last time we got above 90 in the percentile was that green dot there. You can see we had a good move. We didn't go down. We just kind of went sideways for a while. And then over here you can see, post the election, we had a big move. And we kind of were grinding slowly to the upside, but grinding into the top of that range into expiration date before we finally started to get going. So, 95th percentile, if I were to go back 5 years, you're still relatively strong. Like only these lines were higher. In fact, if I were to say draw this horizontal line and edit that for 4.37, so we're almost 5% up above, more than 4.25% up above the 8-day exponential moving average. You can see, well, here, let me zoom in. You can see that we got that far up above there. You can see the big spikes we had coming off a significant low point where we were 16% below the 8-day moving average. You come over here during all this bullishness in 2019, never, even coming off that low point in fourth quarter 2018, we didn't get this far above the 8-day moving average. Coming off those lows in early 2018, we never got this far above the 8-day moving average. And you can see right here, coming off of that significant low point at the end of 16, post-election, we got this far up above before we started to grind towards the 8 and got that little divergence, and then we really went sideways for quite a while in early 2017. So again, just shows just how bullish we are now, because we've hit this level multiple times on this current intermediate rally here. and now we're doing it 3 months in. No, actually, this was November the 4th. So yeah, November to December. Yeah, we're 3 months into this run, and we're getting that far up above again. All right, now let's take a look at how the intraday chart, and you can see the gaps I'm talking about. So some of them have been filled. That one still hasn't been filled in yet. Most of this has been filled in. About half of today's has been filled in. So that's kind of what I'm talking about. So there's been a lot of gaps. Of course, there's this gap from February the 2nd, from last Tuesday that we haven't filled in yet. That's actually going to be below the point of control now because of how bullish of a move we've got. That was very low volume, so that has no characteristics of a breakaway gap or a runaway gap. So it has all the characteristics still of a common gap. Doesn't mean it has to be filled in within a day or two. So keep in mind that that's still out there. All of these that we've had in the past, we have filled in, even if it's taken a few days. This one we filled in a few days later. This one we eventually filled in finally. So I fully expect that we'll probably come back and fill this one in too at some point in time. So not out of the realm of possibility at all. The volume today was very light. So as bullish as we've been, you can see it's been very light volume. 38 million shares trading hands. The trading range today was 2.21 points. I mean, this is very, very small moves, very light volume. That's a grinding. That's why I say, like, if we keep going up, the upside is very limited because of how small and grinding the moves will be versus, say, if we do get any kind of exhale, you can see again the reminder of how fast, how much and how fast it can be, how bigger the moves can be to the downside and how small the moves can be to the upside. Volatility even though we actually rallied with volatility today, we stayed at very extremely low levels, so at 80%, which means a good chance that we get a jump in volatility would get us to 90%. There's going to be some resistance there, but that's still a jump in volatility. And considering that we're at 21 already, that would probably get us to the mid-20s if we were to get to that point. And that would just be like, say, on a near-term pullback. Of course, if it gets to 105% eventually, then we're looking at the prospects at the beginning of an intermediate pullback. But usually it will kind of stop. If we're this low, stop at that 80% mark. As you can see, we're actually lower than we were back in January, even though we're at roughly the same levels on an absolute basis than we were back in January. All right, so just to summarize, obviously we're in a very strong bullish move. It's bullish nonetheless, and for example, if you watch today's Market Outlook Live, we talked about a couple of bullish trades, directionally bullish trades that have been doing very well in the last week or so. So they've really got a lot of return. So even though you are strongly bullish, even though it's funny, there's people on Twitter that say, why do you hate these bull markets? Just trade the trend. Well, it's like, well, yeah, you can trade the trend and you can expect an exhale or an intermediate pullback at the same time. That's the beauty of being able to trade multiple strategies with multiple time frames in all sorts of directions, up, down, or sideways, as you'll see with today's trade. And what we've done recently as well. So yeah, even though I expect, even though we are strongly bullish, and yes, the risk to the downside is much bigger than a grind to the upside. But it doesn't mean that we still can't make bullish trades to take advantage of the trend, as well as less bullish trades, just in case we do get at least the beginnings of an exhale, especially coming into that March expiration, we have a little bit more time. So that's my, so again, strong bullish, just be prepared for the type of exhale move that can come quickly. We've already seen kind of what it might look like, with this GameStop move and how fast and quick the exhale was there. And that wasn't even an exhale, it was just noise. But, again, the more we go up, the bigger the gap between 0 and 23% gets. So the noise gets louder before we eventually start an exhale. So be careful. Because the risk of a noisy move is much bigger than the risk of a small grinding move. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. Comment below as to why, or what are you seeing, or what indicator or chart are you using that suggests why you're either a lot more bullish than I am, or that you're a lot more bearish than I am. All right, let's take a look at the 6-day rally. So we went through all of last week here, and then into today. So let's go to the 8th here. There we go. So this is, again, this 5.5% over the course of 6-day rally, and small cap stocks up 10.5%. So really, the last few days they have really taken off. Emerging markets outpacing developed markets, continuing to show some outperformance there. Long-term or high-yield bonds outpacing treasuries. Gold is up the last few days as the dollar's been weakening. Let's take a look at some of these other asset classes. So let's start off with what the dollar is doing relative to the other biggest currency, most liquid currency out there, which is the euro. A little bit of a bounce back up. It was nice little rally. Of course, short-term sentiment, we were very oversold, well below the moving average, and we had a cluster. So not surprising we get a little bit of a bounce back, but not until you break the 23% are we looking at a new trend, a new intermediate run starting. So take this little rally here with the rally in the euro, so drop in the dollar with a little bit of a grain of salt there. It's not, we're definitely not back on a new bullish run here in the least bit. If you take a look at how gold is responding to the weakness in the dollar, it's also rallying, but again, also below the moving average. We don't have dark green shading anymore, but we're still at a red line. And you don't get the long periods of dark green shading like you do the long periods of dark green shading. So not surprising we get a little bit of a bounce back up, but until we break that moving average, and especially until you break 1940, then we're still kind of in intermediate mode here. Looking at like the 10-year note and long-term bonds, there's the 10-year notes, a little bit of weakness there. You can see it in the other direction with bonds kind of forming a little bit of a Harami pattern, oversold cluster the last few days. Again, very pretty significantly below the moving average, an opportunity to come back up to the moving average on any kind of weakness, right, and softness and risk appetite. So, and then finally, let's take a look at the commodity prices as inflation expectations are really ramping up, and that's just really what's driving a lot of the bullishness here, especially in that small cap space, is this tremendous jump that we're getting in commodity prices. They're really taking off here. If you look at the long-term chart, we're well up above that 200-day moving average. Again, going out to the PPO to kind of get an idea of just how far above that 40-week exponential moving average we are right now. It is the highest in the past 5 years. If I go out as far as I can, at least in the last 20 years here, actually this goes about 15 years or so, then I'm at 15%. The only time I was ever higher than that was when commodities hit the peak of their cycle here in 2008, at the very tail end of what ended up being a very strong run. Until then, at the end of 2007, you can see we're about as high then as we are now. And here in 2011, we were as high now as we were then, up above. And that signaled a really strong move. And neither one of those levels, this one where my cursor is, we came off of 0 there. This one where my cursor is, we also came off of -8. Here we were -20, and it got up now is above +15. So it's been a good run to get to the moving average, and then another good run to go above it. So it's definitely due for some kind of exhale type move. If you look at it on an intermediate basis, you can see it that way. If you look at it on a market sentiment basis, a more of a longer term basis here, going all the way down to where it started with that low point, and I can do regular candles, and you can kind of see, from that low point all the way up, again, coming down to the 200-day moving average, you'll find some decent support just also at the 38%. But again, you won't see that until, you start to break down more, especially until you break down like the 8 and then ultimately the 17. And we're so far above the 8, so far above the 17 that that's not even a threat in the next day or two. So if we are going to get any kind of exhale, watch for it probably, if not at the soonest, by the end of the week, but probably not for another week or two before we finally get, and that's again at the earliest before we finally get any weakness. We might go all the way to March expiration before we do, and while that still would be a long time, 4.5 months of an intermediate run on the S&P, it wouldn't be unprecedented. In fact, it's been rather precedented here relatively recently to have longer than normal extended intermediate runs on the S&P because just how crazy bullish the option call buying has been to push a lot of this higher and to have, to put as much gamma exposure risk as there is out there. All right, now let's take a look at how the sectors are performing. Now, again, this is during the 6-day winning streak, and look at those sectors. So energy just really killing it, up almost 13%. Financials up 8%. Industrials, you can see, outperforming the S&P. But you can also see technology and discretionary and communication services all outperforming the S&P too. And the only things that aren't are all your safe haven sectors. They're really kind of lagging behind here. Healthcare especially, you can see, it's not surprising. These real estate or interest rate sensitive sectors declining too. Staples lagging behind. They're still all up, but they're all lagging behind. And when you look at the 12 grid for all these different sectors, we're all back to dark green shading and green line for the most part. You got materials as light green shading, but it's getting closer. We're back above the moving average, and staples, healthcare, you can see. So your safe haven still kind of lagging. Look at energy really bouncing back up and getting up to new highs. Real estate's looking really positive as well. Industrials, financials really getting back up and going, and then some really strong moves in these areas. When we got this far up above over here, you can see how fast we got down to the 30-day moving average. Doesn't mean we have to drop down. We might just grind sideways and moving average catch up. But when you are that far up, it's like, again, you're kind of walking a tightrope, so to speak. The benefit is it's a pretty strong rise, so it wouldn't take very long of sideways action to catch back up to the 30 days. So we don't have to drop to it, but it's just not a lot holding it up when you're that far up above it. So for our trade idea of the day, one stock that's looking really like a good bounce candidate too is Marvell Technology. You can see we dropped down to the moving average. We got light pink shading, yellow line. We bounced right back up here today, closing above the high of the low day, so to speak. You can see the 3 green arrow chart getting back above the 8 and the 17-day moving averages after a few days below the 17 and a small brief dip below the 30. The histogram turning back up. The stochastics is slowing it down. Its descent. You look at the directional movement index here. Again, you can see we had dropped down below 25, but bounced back up. We had bounced above 20, but bouncing back down on the negative index. The ADX is still easily above 20, so we're still in a pretty good trending state. If you look at the RSI and the CCI, you can see, again, we didn't drop very far. We briefly dipped below 50. We're back above. We briefly dipped below negative 100. We're also back above. So these are good bullish levels here. You look at the Bollinger Bands. You can see we dropped down to briefly below the moving average. Didn't quite get into the lower quartile though. And we're right back above the moving average into the upper half of the bandwidth, and still above the value area. So we have some upside potential going into March expiration. But of course, again, we might start our intermediate decline. So that's why you want a strategy where we can take advantage of both the upside with a bull put spread at the 45.40, selling the 45, buying the 40, like this. But also, just in case we were to come back down, have a bear call spread to help protect against that. So selling the 60 and buying the 65. So it gives us we ended up getting, how much credit on this? For one contract here, let's see if it will allow me to duplicate. Create a a rolling order. No, I won't be able to do that. I didn't want to duplicate that price. But you can see we pretty much got, what, 69 cents there on the puts and about 59 cents there. So $1.28, I think, if I added those numbers up correctly. So 384 for 3 contracts for normal risk. Even though there's earnings coming up here before March expiration, you can see where my break evens are. So my break evens are outside the move to the upside. So if we were to continue higher, great. But if we were to drop for whatever reason, you can see my break even over here is on a very strong volume node inside the value area that can act as a good support level that can hold us up if we were to drop down. So very, very wide range to trade in between now and March expiration, with some good support to the downside and plenty of room to work with to the upside. And that's why I went for the full position sizing on this trade. And really quickly too, one more thing is, in our Market Outlook live video today, I actually did add on a new trade to that NVIDIA trade. So I did an NVIDIA in a prior Market Outlook. We've been talking about it in all the Market Outlook live since. And today we added a different trade. We still stayed in the Iron Condor that had the February expiration, but we added a new trade to that today. So again, one of the things you get out of the Market Outlook live videos. But you've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Remember, you get that for free. You get access to that for free with your free subscription. But open up any new threads with any questions or comments you have. Reply to anybody else's threads. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video below. Remember to like the Market Outlook posts on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.